This will be a short one, but I'll just go over a company called Olin, which does specialty chemicals, and I'll show you why I looked at it and quickly discarded it. So the disclaimer, this is for educational and informational purposes only, not a recommendation to buy, not a recommendation to sell. Do your own research. I'm not a financial advisor. I'm not a financial professional. I'm just a average individual investor and working through my process and recording it as I learn in public. So let's get started with Olin. So I think generally when you invest, you should look at things very quickly and discard them. You shouldn't and spend too much time looking at something if you see red flags. You should just move on. There's thousands of stocks out there, and if you waste time on things that are dead ends, you won't have enough time to focus on the things that are truly promising. So when you find some big red flags, you should just put it in the too hard pile, as Warren Buffett does, and then just move on right away. So let me share the screen here, and I'll show you a company that I was looking at. So this is a company called Olin, and let's see if you can see it. Yeah, this is a company called Olin, and they are in the specialty chemicals business. So they make chemicals for things like, if I remember correctly, like PVC pipes and styrofoam and things like that. So $7 billion market cap, and what's the enterprise value? So about $10 billion worth of debt. And on certain factors like trailing PE, 7 times earnings, that's like a 14% return on your investment. And this EV to EBITDA, that's very cheap. So normally I like to see something below a 10, and this is below a 5. So on certain metrics, this is really, really cheap. Great return on equity. Generally, 10 or 12% return on equity is what you see in companies. Above 20% is usually great. This is 40%, very high. I don't know if it's sustainable, but very high return on equity. Some drawbacks, revenue growth down, earnings growth are down. But I did notice a well-known value investor named Robert Robotti, who's like a deep value guy, had invested in this during the pandemic, I believe at around 10, and then it's at 50 now. So, 5 times your money in 3 years, that's a pretty good deal. But that's all in the past. You have to look at the future. And are there things in this company that give you pause? I should mention, besides the specialty chemical things, they also make ammunition. So when Remington went bankrupt, they bought the Remington ammunition factory, which had sort of been run terribly, and they put some money into it, and it seemed to be doing really well. A week or two ago, there was an explosion there and somebody died. So, that's terrible. And they also run a factory that makes ammunition for the US government. I believe it's in Springfield, Arkansas, Ohio, I forget where. But this plant is a strange one because it's actually owned by the US government. The government built it. The government owns all the equipment in it. And they take bids on people to run it. And the current winning bidder is Olin. And the way it works is, as I said, the government owns the machines. They own the facilities. Olin manufactures the ammunition for them. But normally the machines aren't running at 100% capacity. So whenever there's any slack in the system, Olin can make their own ammo on it and sell it themselves. But they're sort of getting this facility where they're not paying rent, they're not paying to use the equipment. They're using somebody else's equipment, and they're able to sell that. It probably is not very profitable because they don't release the numbers on what the profit margin is on that, and they just lump all the ammo sales together. But because of the war in Ukraine and the ammo shortage, I would imagine that company is producing more ammunition for the government than before. And if you're producing more for the government at a certain cost plus whatever that is, you don't have any extra slack to use the equipment to make your own ammunition for free. So yeah, that part of the ammo business does not look that interesting. And there is a company called Vista Outdoor, which makes ammunition, and they also make sporting equipment that you would see in REI, like Camelback, those waterbacks, and Fox Racing and stuff like that. And they're splitting up into two companies. So if you're interested in a ammunition only play, that might be a good one to look at. There's also a company called Ammo Inc., whose ticker symbol is POWW. They also are a ammunition only play, and they own gunbroker.com. But if you look at the management there, yeah, it's not people I would want to invest alongside of. So that's, I'll leave it at that. But this one seemed very interesting, and they actually they bought back 16% of their shares last year, and this year they're buying back 10% more. And normally, if you saw a company buying back 26% of its stock, that's a great sign, because if you're buying back shares at less than intrinsic value, that usually benefits the existing shareholders. So if you and I owned 50% of a building that was worth $1 million, and then you decided to sell me your half for 400,000, I've got $1 million building that I paid 900,000 for. So you can see if you buy something for less than intrinsic value, it tends to benefit the remaining shareholders. So back 26 company, if it's at a good price, would seem to benefit shareholders a lot. So what is the problem? There's a website that I go to time to time called Open Insider, and they track purchases and sales of different stocks. And when you look at a specific stock, it'll tell you if the person selling it or buying it bought it with their own money, or if they were just exercising stock options from the company. And so you'll be able to separate the signal from the noise. And here, if we look at Olin, there's a lot of insiders, and they're all selling. I don't see any purchases, see a lot of sales. And one guy who runs a hedge fund, who's on the board of directors, Scott Ferguson, if you could see here, he sold 148 million. And you see here, he sold another 148 million. And the sale here at 60, it's pretty near the all-time high. I think it got as high as 62. And so, you know, millions of dollars in sales, 300 million in sales from Scott Ferguson, a couple of million in sales from James Verlick, actually 3 million, and 4 million in sales from Pat Dawson. So you've got no insiders that I've seen buying, and you've got a lot of insiders selling, and they're selling a lot. So they say that buying is a much better signal than selling, because there could be reasons that somebody is selling shares that have nothing to do with the company. You know, maybe you're putting your kid through college, maybe you're buying a house, maybe you're buying a yacht or whatever. But if you're buying, the only reason that you're buying is because you think it's a good value. So although the company is buying back 26% of the shares, these people who are at the company and their insiders are not buying. And in fact, you know, it's possible that one of them is buying a yacht, another one is buying a house, but you know, I find it very questionable that all of them are selling and none of them are buying. So buying back 26% of the stock, as I said, can benefit insiders who remain, or sorry, shareholders who remain, if you're buying at a good price. But buying back 26% of your shares when the insiders are selling hundreds of millions of dollars of stock. Another way that you could look at that, if you were skeptical, is that they're using the corporation's cash to prop up the price of the stock, so that the people inside can can cash out at a higher price. So I don't know which it is. Maybe it's a great company and that's why they're buying the shares back. And maybe the insiders have other reasons for selling, but this raised a huge red flag for me. Not only is no one buying, they're all selling. So it didn't take me very long to just look at this and then move on to the very next one. Because as I said, you should be turning over a lot of rocks to find something you like. And then when you find something you like, start looking deeper, deeper, deeper. And then if you find a reason not to buy it, then move on. But some of them you can discount right away. And this is one that I pretty quickly put in the too hard pile. And, Robert Robati still owns a lot of this. Maybe he'll make money on it. I don't know. There's a guy, Chris Boomstrand, who owns a bunch of this, if I recall correctly. And, maybe he'll do well at this. I don't know. But yeah, here's the 5-year chart. So it was $11 back then. But as I said, you have to look at a stock looking forward, not backward. And it went up 5x in 3 years, and that's great for the people who had it 3 years ago. But that's not necessarily great for you. You have to look at what's going to go on in the next 3 years. So, as I said, it's an industrial company. They make specialty chemicals. What's your view of the specialty chemical industry? What's your view of the ammunition business? And if you don't have a good answer for that, and then you should dig deeper or ask yourself, why are you buying this if there's other people selling? Well, that's all I'll say about that. So yeah, this is one, as I said, I looked at it pretty quickly and put it in the too hard pile. But if you dig deeper and you find information that makes you more comfortable with it, you do you. So if you have any thoughts on this, leave it in the comments. Once again, this isn't a recommendation to buy or sell. This is just me looking at individual stocks that I was interested in and documenting my process as I go, so that I sort of learn in public and hopefully get better as I go. And if I make a mistake, I want it recorded so that I figure out what the mistake was. And if things go right, I'll figure out where to go from there. So feedback is important, and it's important to record your thoughts as you go, either in a journal or something like this, so that you don't have a recollection that is inaccurate and you sort of fit the outcome to the facts. You sort of want to have your thesis set out ahead of time. And as I said, this is I turn over a lot of rocks, and this is one that I discounted pretty quickly. But if you have a different opinion, let me know. And if you're interested in buying this or selling this, do that on your own. I'm not recommending it either way. I'm just saying this was in the too hard pile for me. But anyway, good luck out there, everyone. And we'll see you on the next one.